Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about NVIDIA Corp trading on the NASDAQ under the ticker symbol NVDA, and they have earnings later this week. One of the things that I'm going to be calling out is the fact that NVIDIA should not be a crazy surprise later this week as they pre-release their financial results, and again, those are going to be preliminary, but those are going to be adjusted, or they should have the expectations built in for this calendar week. They also dropped their overall expectations for full year fiscal year revenue. It's important to note that the company does not trade on a calendar fiscal year. So what we're going to be looking for is where's the stock going to go. Now, if you saw my last video, you'll recognize that I am overall bearish on tech right now, and I expect that we're going to continue to see the impact on tech earnings this calendar week, as well as the fact that we've got the FOMC meeting, or rather the Jackson Hole Federal Reserve meeting, where we can expect additional commentary primarily coming from Jerome Powell. And one of the things that I'm going to call out as we look at some of the financials associated with NVIDIA is this is an incredibly strong company. It's one that we've been watching on the channel for a really long time, and it's had a massive run. However, one of the things that I would call out when we look at the COVID time period and how it's come cratering back down is the fact that as the company begins to feel pressure from inflation, they're seeing their cost of goods go up. And the other side, they're seeing consumer business, especially when we're looking at the gaming segment, continue to feel some of that pressure. The expectation is I think we're going to just begin to feel some of the potential impact that we could see from higher interest rates as well. So let's talk about what we can expect. So we've got the company right here, and when we're looking at the income statement over the past few quarters, one of the things that they already announced is that they're expecting weakness in the gaming segment. This is on a fall from 33% compared to Q2 of 2021 and 44% reduction in gaming revenue to Q1 2022. So previous guidance was 8.1 billion for the overall company. They're now expecting that to be 6.7 billion. So if you look at the charts right here, recognizing that Q4 is generally their strongest portion of the calendar year, then Q1 actually turned out to be really, really good for them as well. But you're saying 6.7 billion, which should be here around the Q2 of a year ago. So one of the things I want to call out, as we're seeing a reduction in overall revenue expectations, the reason why they released this expectation, or why they released these numbers, is because this is going to be a rough quarter for them. The biggest thing that I would call out is when we look at their valuations, one of the reasons why we really, really like NVIDIA is they continue to have this incredibly high gross profit margin of north of 60%. However, one of the things that they did call out is that they're going to see their gross margins fall to around 40 to 45%. Let me call that out, and in particular associated with NVIDIA is it has continued to be north of 60%, and anything less than 60% I think is going to be a huge blow to their overall profitability. So one of the things that we need to look at going forward is A, how quickly are they going to get back to this growth? Because again, when we're looking at the company as a whole, they've been growing revenue at around 50% per year. Again, this is on a trailing 12-month basis. So the company has continued to perform incredibly well. Because of that, they've been able to command a very high valuation. When you're looking at a PE ratio, this has been as high this year as 70+% or 70x. So this is something that I expect will immediately go up if they have a poor earnings, which they again have already released some preliminary numbers. So I expect that to be a pain point. Price to sales is still double the industry average, and price to book still significantly higher than the industry average. So why am I calling this out? Well, the company itself has continued to have a monster run over the past 3 years. You can see that it had a very boring 2020. Let me put it on the 5-year trend for us. So this is after they went through with their stock split, but I would call out their pre-2020 high, or rather their pre-COVID time period high, was here in 2018. And that time period, it was around, I'll try and call this out, around $73 a share. So if it was around $73 a share, right now the stock is sitting up about 2.25, 2.5 times that price point following a monster run in 2021, 2022. One of the things or the reasons why it was purchased and the stock rose a lot in 2018 was there was a lot of interest in primarily Bitcoin as well as other cryptocurrencies, but primarily Bitcoin. So if that was the case, well, you can see how that rose in 2021 with tech stocks overall. However, in 2022, especially with rising interest rates, we've seen tech be under pressure, as well as cryptocurrencies and Bitcoin be under pressure. Because of that, you've seen a fall in tech stocks. The question is going to be is we saw this kind of drop and pop. Are we going to see another drop more in line with 2019 or even 2020 levels? I am of the opinion that we're going to see more of the latter, where we see stocks, especially high-flying tech, go back to 2018, 2019 levels. Again, if we're looking at where the stock has come, you're seeing a massive sky-high valuation that occurred with the massive leveraging that we saw this calendar year. Because of that, I still have relatively low expectations associated with the stock price. One of the things that we can look at on the year-to-date is the stock dropped from around $188 a share back down to $170-ish a share when they announced these results. And since then, it's stabilized. However, in July, we saw a return to sub 150. I don't think that those are out of the realm of possibility, especially given the broader macroeconomic environment where we continue to see negative data. A lot of institutional investors, a lot of retail investors continue to wait for that Fed pivot, and the numbers, or rather the minutes from the FOMC meeting that occurred in July, did come out this past week. And what those numbers highlighted is the fact, or what those minutes highlighted is the fact that they're currently waiting to see the impact of 2.5% interest rate. That does not show that they're ready to pivot at this point in time. The other thing that I would call out is because of all that easy money, the expectation is that they're going to do a immediate rate cut from 2.5% back to 0, which is where we were during the pandemic. Meanwhile, I'm of the opinion that if they were to do a rate cut, it would be in increments of 25 basis points to try and juice that economy. However, at some point in time, you have to pay the piper, and there was a lot of easy money in 2020. As such, I think right now a current appropriate target level would be that 150 time period. Again, I'm not much of a technical investor. Rather, I'm looking at macroeconomic trends and macroeconomic moves. And as such, I think that we are headed down because even if they were to cut, we're still at 2.5%. The stock is here. Meanwhile, that's the same level it was at May or back in May, April time period. And I just don't see that being an appropriate place when the company is saying we are going to be growing. We are going to be growing less profitable as well. Again, I'm overall a tech bear right now. I don't think that there's not going to be opportunity, and I don't have anything against NVIDIA itself. I think the company is fantastic, but at this point in time, I am not a buyer, although I would look to be under 150, recognizing that that is still going to be well above their prior 2018-2019 highs. So I'd love to hear your opinion. Drop that in the comment section down below. And if you find this content helpful, please leave a like and subscribe. Thanks for watching. Talk to you later.